While Trump shakes up the markets with his ideas on new tariffs, the head of the US Central Bank is in no rush to make changes. Jerome Powell has stated that cutting rates too quickly could undermine progress on inflation. It's also unclear how the actions of the 47th president will affect the US economy. However, one market anomaly is already visible. Gold and the US dollar are no longer pulling price opposite direction and rising together. Meanwhile, we keep an eye on the key macroeconomic data and how it affects currency trends. You are watching Traders Calendar for February 14. Mid-month usually brings crucial inflation data for central banks. However, such a report is just the starting point for the next phase. Another type of data is preliminary figures, which reflect expectations of experts, managers, or consumers regarding future events. For example, Australian consumers expect the price growth to slow down in February, dropping from 4% to 3.8%. Lower inflation will pressure the Australian and New Zealand currencies, which could also affect oil prices. Some economic indicators have a delayed effect, including wholesale prices. If wholesale costs rise, final product prices are likely to further boosting consumer inflation. However, this data has an additional peculiarity. A decline in wholesale prices may signal weak demand, which can indicate a slowing economy. In that case, recession risks grow and the national currency weakens. Thus, January's drop from a plus 0.1% to minus 0.3% in Germany's wholesale prices is a negative signal for the euro. Despite potential euro weakness amid the publication of various reports, this effect could be moderate if the Eurozone economy meets forecasts. The GDP growth is expected to remain at a 0.9%. Earlier estimates predicted a climb to 1%, but even the anticipated 0.9% will allow the EU's total GDP to show growth in the fourth quarter and 2024 overall. On the same day, the Eurozone will release its employment report, unlike the United States, where non-farm payrolls are published monthly. Europe assesses labor market trends quarterly. Forecasts suggest that the second half of 2024 will be more successful, with the employment rising by 1.1%, and this report could increase volatility for the euro or even trigger some growth. A crucial day is ahead for the Russian ruble, as the Bank of Russia will announce its rate decision at the end of the week. Over the past year, the interest rate has jumped from 16% to 21%. In December, analysts expected another hike to 23%, but the central bank surprised everyone by pausing. Forecasts suggest that this pause may continue into early 2024. More details on the bank's plans will be revealed during the press conference scheduled 90 minutes after the rate announcement. A few hours later, inflation growth data for the Russian economy will also be released. The macroeconomic calendar hints at mixed signals for the US dollar. On the one hand, retail sales are expected to decline. And in January, a rise is projected to slacken from 3.9% to 3.7%. The downward trend started in December, a time usually marked by peak holiday spending. If January's results confirm this trend, the greenback may come under pressure. Any potential decline in the United States dollar may be short-lived. Less than an hour later, US industrial production data will be released. In December, the numbers not only improved, but also turned to positive for the first time in 6 months. A further rise from 0.5% to 0.9% in January would signal accelerating U.S. industrial activity, supporting the dollar's appreciation. Most central banks rely on the latest inflation data before adjusting interest rates. And the Bank of Russia, however, follows a different approach. The rate decision comes first, while inflation figures are published later in the day. In reality, the key rate is a tool for managing monetary policy and the price stability in the country. This suggests that the Central Bank of Russia may have other ways to curb inflation, which is expected to rise to 9.7% in January. Some analysts even predict a jump to 10%. Please note that the time of above-mentioned publications is set in a GMT plus 3. The next video review of a trader's calendar will be released on a Friday, February 14. And now we wish you profitable trading and see you soon.